that? So good morning, everybody. The few of you that joined, thanks for coming in. I'm going to run you through the Ispire Technology story. Take a few questions if you have any at the end. So if we can just go ahead and hop into it. Is there a clicker? Oh, that would help. Okay, company overview. Last year's financials, we did $151 million in revenue. The company essentially falls into two major categories in terms of our business. We service the North American cannabis industry, as well as the global nicotine products industry with vaping hardware. In addition, recently we have launched our own e-cigarette products into international markets, beginning with South Africa. So the company itself has over 15 years of experience, which is pretty much since the beginning of vape as we know it today. We operate in 30 countries globally. This business is really built upon technology and having patents and defendable technology. It's evolved significantly over the last even few years, with consumers demanding higher and higher levels of quality in terms of the hit, in terms of the experience that they get. And so it's critical for us to stay in front of that. And to that end, you can see, going way back through our related party company and our sister company, if you will, eGate in Shenzhen, China. You can see kind of the development of the technology leading to what we're very excited about, which is our G-Mesh technology, which really we think is going to make a game-changing difference to the products that are out there today in terms of the consumer experience, in terms of the safety element as well. And so that product is coming to market here in the next couple of months. We have applications in both the cannabis sector as well as the nicotine space. So when you look at our revenue by region, you can see that it's diversified a fair bit, concentrated mainly in North America and Europe. Africa, with our recent market entry in South Africa, as I mentioned, and then a real opportunity for us in Asia Pacific to expand our footprint there through our two operations. In North America, we service cannabis through Ispire, and then the rest of the world is our open vaping systems, which are sold through our Hong Kong subsidiary, Ispire, based in Hong Kong. So, global diversification. You may have heard about these things called tariffs that are out there that have a small impact on us here in the U.S., but it doesn't affect the rest of the world. So we have a little bit of hedge there, and we have another one which I'll speak about in just a minute. So when you look at our company, what do we focus on? And oh, by the way, just very quickly, my background, because here's this guy talking about vape and nicotine and all this stuff. Well, I spent 18 years with British American Tobacco, evil tobacco guy here. Now I work in cannabis and doing exactly the same things, and people think I'm cool, so it's kind of nice. But from that time, I spent 14 years roaming the world, basically in 8 different markets, and so really I've seen the nicotine space and working in regulated markets, dealing with underage access, excise, et cetera, which has direct application into everything in Ispire. So, basically been in this game for quite a while. So in terms of our strategic pillars, the first one is proprietary age gating technology. This is really important. And for those of you that aren't sure what that is, it's basically you can take a vaping device and through a Bluetooth connection to your phone and using technology that's based in clear, like you go through the airport, you see clear, right? Verifies, you scan your ID, you take a picture, and it says, hey, you're Jim McCormick, you're 25 years old, you can use this product, and it unlocks your vaping device. And why is that important? Well, obviously, underage access to vaping products is something that nobody wants. If anybody's been into a convenience store here in Vegas, I was looking at the market last night, every single flavor of vaping product you see is illegal. Every single one. And that's because the FDA has banned flavors in the US. So those products are unregulated, they're not taxed. And this gives an opportunity to basically bring flavored products back into the legal market. And we'll talk a little bit more about that. Second pillar is expanding our Malaysian production base. We started this project a little over a year ago. We've got our first operation up and running. The second, much larger facility is in development right now. Obviously would give us a hedge against the Chinese tariffs. It wasn't the main reason for doing this, but certainly provides an enormous benefit for us going forward. Calculated growth of the cannabis-related vaping products. What that means is, so I've been in the legal cannabis market since 2017 with Kush bottles initially and various other MSOs. And the market is challenging, to say the least. So you've got a lot of people, because of 280E, because of all the other regulations, basically having to go state by state, very inefficient, no synergies, et cetera. So, you know, we have, we cast a wide net initially into the cannabis market and got a pretty significant foothold. But unfortunately, a lot of those customers have a problem paying, which is a problem for me as a CFO. And it's very challenging. So we've decided, hey, we want to play in this space, but we're going to focus on larger, more reputable MSO type customers. And so we've really scaled back in terms of where we're going to focus there. And then finally, international nicotine, you know, that is the big play. You know, we're talking, you know, $30 billion out there. Basically, the market leader is Vuse with about 29% market share globally. It's wide open. It's a wide open playing field. Developed market, you know, it's a known commodity, and it's, like I said, open for attack, as you can see right here. So, you know, you're talking about a CAGR that's growing at around 13% from the nicotine vaping. You know, e-cigarettes themselves, there's so many different opportunities for nicotine, you know, delivery outside of traditional cigarettes, whether it's pouches, which are exploding, vape is going to be part of that, you know, et cetera, et cetera. But, you know, we've got a real opportunity with our technology and our international experience and our distribution network to go after this. Now, the U.S. vaping market is fascinating, to say the least. Legal market size is $11 billion. But as I said, just go to any of these little convenience outlets and you'll see that it's dwarfed by all of these flavored products in the market. So it could be 5 times that. It's really hard to tell. Nobody's got a really good estimate, though. You know, BAT thinks it's about 70 to 80% of the market is illicit. I'd go with that. But to get to play in this market, you've got to go through what's called a PMTA process, okay? And it's expensive, it takes time. But we've already spoken to the FDA about our product, which is, we're going to talk about in a second, but basically we'll unlock that vaping device only for consumers of adult age. And they said, you better apply and you better apply fast, because this gives them an opportunity to basically open the market back up to flavored products, which, you know, yes, it's attractive to underage vapors, but guess what? Most adult vape consumers want flavored products as well, which is why the market is so large in terms of the illicit element of it. So it's exciting, but to play, you've got to go through this process. And you can see the interesting thing when you look at the, from 21 to 24, 6.8 million applications were made. 86 have been granted. So your odds of getting through that funnel are not really good. However, we're going to go not on a product basis, we're going on what's called a component PMTA, which we're actually filing next week. No one's ever filed that before. It's never been done on a device versus a flavored product or any product per se. So they're going to do this right just for us, basically as a first-time applicant under the PMTA. And we're confident that they're going to give this the highest priority, because they go to these places too. They know what's happening in the market, and quite honestly, it's out of control. So a little more in depth. So we play in this space through 2 of our partners, Chemular and Verify, that basically have developed the technology. We are a 40% participant in the joint venture, which has what we call under what we call IKE. Ike Technology. So it's a patented blockchain process, and this has been, by the way, presented to 6 of the major international tobacco companies. And I can tell you, working with BAT, the first thing you do when you see technology like this is you tell your engineers, find a way around it, you know? No one's found a way around it yet, and it's been a couple of years. So we're pretty confident that the patent technology is going to stand the test of time. We're in discussions with 2 of those partners, potentially for licensing revenue opportunities. So we're very excited about this. As I mentioned, we're going to file the PMTA actually next week. And potentially then that opens up the market to the flavored products. And we will be filing as well for flavored product entry subsequently to the component bit. So the US is really critical, but it's a global game. And this technology has already been presented to the House of Lords, members of the House of Lords in the UK. This is a global problem, underage vaping. So, you know, yes, the US is the largest vaping market, significant contestable space in terms of profitability, but it plays all around the world. That's why when you talk to people like Philip Morris International, you talk to British American Tobacco, JTI, they see this applying, you know, globally. It also has application in the US and other vaping on the cannabis side. So, you know, it's an unbelievable opportunity for us. It's one of these, I wouldn't call it a lottery ticket, but, you know, we drive the underlying business, but then you have this, and it's an absolute, you know, game changer for the vaping space. So how can we turn this into revenue? License potentially to big tobacco, could be an outright sale. I don't see that happening, but it's possible. And then the opportunity to use that technology ourselves to enter the US market, and then into cannabis, as I'd mentioned. From the flavored pods, you know, look, I don't want to go out there and fight Altria in the trenches. I mean, it's silly to do that, but, you know, when and if we get flavored PMTA approval for products in the US for sale, those can also, those rights can be sold to players already in the market, which NJOY did for $2.5 billion a few years ago. Some of you may be familiar with that. So from the cannabis side, again, the growth is great. It's there, it works. I mean, no doubt about it, but it's a mess. The market is a mess. The way it's been designed, state by state, no federal oversight. So it's very challenging. Nonetheless, we are going to participate with multi-state operators. We also support those MSOs with a new technology in terms of filling. So we have a basically razor blade model with this, what we call I-80. So you can fill 80 cartridges at one time. It's the fastest that's out there. It gives operators significant operational improvement. They all have it, but you've got to migrate them to these self-sealing cartridges, so it takes some time. But it's a good opportunity over the next, let's say, 24 months to move people onto our platform, and we've got those in test with 3 new MSOs right now. So, you know, this comes down to basic execution of your business model. We could sell as many of these cartridges as we want, but we've got to work with customers that can pay. So deposits, it's the basic stuff. Deposits, following up on getting those payments and working with those customers. It's a very tough situation. Though I can tell you, since the tariff stuff went crazy, you know, our sales phones are ringing off the hook because we have you know, about $7 or $8 million in inventory in the U.S. that's pre-tariffs, and everybody wants it now. You know, couldn't sell the stuff a few weeks ago, but now everybody says, hey, you know, give me that stuff, that non-tariff 145% or whatever it is markup. But nonetheless, that's not sustainable, having those barriers to entry. But you know, with our Malaysian facility, we've had not only our customers, but also other producers talking to us about how they can block space there. So that facility, we'll get to it in a second. There it is. On the top, our current facility, we run 7 production lines there. It commenced early last year in February 24. So we produce products, mainly cannabis-related products. We do have 1 nicotine line working there right now. But a major step up would be to our phase 2, which is 136,000 square feet, the potential to go to 70 lines. And I can tell you right now, if we could turn them all on, we could turn them all on today and fill them. With the potential to make up to basically 1 billion pods, which would be the disposable, let's say, nicotine things that you see like on a Juul, something similar to that. So, you know, that investment, believe it or not, it's not as massive as you would think. Some of the automated equipment in this space is not as expensive as it is in other sectors. So, you know, we can get that up and running with $5 million of investment. We can have that thing up to about 60% capacity. So, you know, step changes, but not step changes in terms of investment. There's a lot of arrows on this slide. So, but basically what they're telling you is revenues have been growing, you know, very strongly. Our emphasis now, though, is really on gross margin improvement. So gross margin improvement by attacking our cost base. We've taken a lot of cost out in the US. Recently, we've moved some of that shared service type work into the Malaysian business unit and some into Hong Kong. So it's all about cost containment, but then, you know, driving down, you know, through the opportunity in Malaysia, getting control of our supply chain, but also, you know, taking opportunities to take our revenue up. But it's challenging on the cannabis side, but we are doing much better on the global nicotine space. So, you know, that's, so my week is really collecting accounts receivable and driving these cost initiatives and making sure that we keep our strategic initiatives in terms of the global nicotine play and PMTA on track. So I can tell you, and you know, having worked now in multiple cannabis and nicotine companies around the world, you know, our current, let's say, cards that we can play, this is an exciting opportunities I've seen in my career. And we've got a great leadership team. A majority owner there, Tony, goes by Tony, based in China. Michael Wong, our CEO, myself, and our operations director, but many others too, people like myself with global nicotine experience, Juul, PMI, et cetera. So it's a lot of fun. You know, basically what I say is we can't wait for Monday. You know, that's what we do. We get up, let's keep going. The holidays slow us down. It's just a lot of fun, and it's a great opportunity. So in highlights, you can see it, major opportunity out there, $35 billion market opportunity. Most of that is contestable. We've got a great product portfolio. Age-gating technology is the play that we see potentially having a massive revenue uplift for the company, but we don't bet on it. We want to drive the underlying business. And then the Malaysian facility. And, you know, look, there's no silver bullets. We're basically becoming a CPG company, and it's hard yards, man. It's trench warfare out there. But if you do it right and you do it consistently, you know, it's a tremendous payoff, and pretty hard to you know, to get in behind that too when you start getting your roots in these markets. So that is it. Any questions? Okay, so the question is about evolution of the U.S. cannabis market, potential rescheduling. That's for the guys back there. Okay, so look, here's the way I see it. So to undermine my own credibility, I thought the Safe Banking Act would have been passed about 3 years ago, okay? And I still haven't figured out why that hasn't passed. So anyway, that being, you know, full disclosure. But the way this is developing, it's become so political, and this is just my opinion, there's no political upside to backing cannabis, okay? There's only potential downside, which is a major problem why things have not moved forward. However, that being said, I think there's too much momentum behind the industry and too much money at stake not to let, I mean, it's becoming to the straw that's going to break the camel's back at some point, and it's coming relatively quickly. So, you know, rescheduling is the first step, and potentially that takes 280E out of place, you know, out of the way, and that's going to be significantly beneficial because having designed a couple of these MSOs that, you know, basically had to deal with 280E, and you can get around it, quote unquote, but it's expensive. You got to set up service companies, all this nonsense. It's crazy. So, you know, it's complicated, but let's say we don't get into a situation where the Congress is tied up and we don't have the executive and legislative branches tied up. You could see the rescheduling before the end of the first 2-year term here of the Congress. You've got to see federal legalization at some point. If I had to bet, I'd say within 5 years. Now with that, and why is that? Because you have so much nonsense between disequilibrium across the markets, the states, that you have to standardize that. And it's going to come with a federal excise tax almost for sure, and it's already overtaxed. So, you know, it's got to come in. We've got an economic disequilibrium that has to fix itself. And, you know, could come faster, could get, you know, kick the can situation, but, you know, the market out there, it's very difficult to operate. And even the best MSOs, GTI, Cresco, TrueLeave, I mean, for their revenues, they should be making a lot more money, and they can't reinvest in things. So it's a mucky answer to a mucky situation. I'm sorry about that, but you know, it's got to straighten out. It's just a question of when. Other questions? Sorry, yeah.
I've got 2 questions. The first one, you repeatedly said it's super exciting, and you worked in British tobacco ad budgets from Philip Morris. We're talking 60–70% gross margins over there, and something crazy like 30%. Like, it's definitely the best industry historically when it comes to like returns. Mm-hmm. How does this compare, and can we get there?
That's why I'm excited. So the question is, you know, dealing with global tobacco companies where you've got 60% gross margins, 40% operating margins, I mean, crazy margins, hugely profitable. How do you get there? And so here's the thing. Look, we aren't going to go take PMI head to head. I fought those guys for 15 years, man. They're tough, and they're good competitors. But you don't have to. You know, you get 3% of the global vaping market. We're all golden, right? I mean, so you don't have to necessarily take the whole thing. The key to doing it is, and look, all due respect to those companies too, as the market's evolved and they have gotten on the back of, you know, supporting the regulatory environment. And vaping's been great for these companies because and I had to do it as GM of markets, is to say, you know, you're supporting the cigarettes, traditional tobacco, as an adult choice, which is the platform you had to take. You didn't market to kids, you didn't do any of that bullshit, right? But it's a hard platform because you know the product's dangerous. It says so on the pack. It'll kill you. It says so. And so for us, you know, when we come in as a vaping company, we're confident, and there's plenty of support out there to show that the product is 95% less harmful than a traditional cigarette. Okay, is it safe? No. Okay, nicotine is not good for people, but it doesn't have the carcinogen. So we come in on that platform, number one. Number two is we don't bring all of the legal and bureaucratic overhang that those companies do. So we can move faster, okay? We can do it legally, the right way, professionally, but we can pivot quicker than they can. So, you know, in South Africa, for example, as we go into that market, we know all the regs, and we're coming in there. We're coming in with, you know, pick and pay and some of the large retailers. But we're not looking to get 50% market share. We're looking to get 10. You know, that's all. And so the answer is, just 1 minute, come on. So the answer is we have to go in with realistic expectations. We don't have the funds that they do. So, you know, we're gonna do it faster, leaner, you know, I'd like to say smarter, but they're pretty smart. But, you know, that's the approach. We don't want to eat the whole elephant. We just want to kind of come in and get our share and defend it. Yeah, go, please. Are there any other questions? Or if there's not, we'll take, go ahead.
So regulation seems to be the other barrier. I was very involved in like 2018 with Canada, and Canada imposed this incredibly smart regulation where they will tax you either 10% or $1. So when the price of cannabis went down to like $3, you have like 33% tax on it. How do you avoid that?
Yeah, look, you've got to be proactive with regulators. So, you know, I had a meeting early in my career when I was GM with the Georgian government, and I explained to them that their excise that they were proposing was going to take their market from 30% illicit to 70%, I think I said. And I was dead wrong. It went from 30 to 90. Okay, so what you have to do is you have to go explain to regulators because you don't understand what the impact necessarily is going to be. And as a partner, they're business partners. They're investors in your business, basically, from that tax revenue. So it's constant engagement. You know, it really is. It's sometimes it's not easy to do because it's going to have political oversights, but and sometimes you get irrational stuff like that. And the problem is when those illicit gets in your market, like it is in the U.S., getting it out is hard. It's really hard, and you know, and the economics have to work. But it's an ongoing battle. You know, excise and taxation is one of the fundamental things when it comes to nicotine in these markets, and not easy, but got to be consistent and have good, you know, reliable messages. Okay, I'm out of time. Thank you very much for everyone joining, and appreciate it. Thanks for the questions.